right, and we're back. Welcome back, everyone. It's been a very exciting week in the crypto space. A ton of new stuff has happened. There's been a lot of interest coming in from institutions. We've seen some really crazy on-chain stuff happen. So let's jump right into things. So first off, we're starting to see these articles in mainstream media really take a different tone. I would say over the last, 6 months to a year or so, everything has been really just bad news in the traditional media. But things have sort of turned around as we're seeing some institutional demand come in, especially around these ETFs. You can see here Mr. Larry Fink called Bitcoin an international asset. He said it's not based on any currency, and so it can play as an alternative in people's portfolios. He also likened it to digital gold. And this is all part of BlackRock's push to make the ETF happen. So to me, this seems like, great PR for the crypto space, a renewed interest from institutions. And it really seems like the tide is sort of changing after a year of just overall bad news. What do you think, Chandler?
I generally think that this is overall good news. I definitely also, as I think between the two of us I'm commonly known as the Bitcoin maxi here. So even though that this is very Bitcoin centric, I am upset that it's very much only Bitcoin focused at the moment. I think there are some reasons on why that's the case, and this kind of makes me think about one of the narratives that got spun out in the 2017, 2018 and even 2019 section was, what was the next wave of crypto adoption? It was meant to be this institutional play, and by and large, that never happened. And so this is actually that kind of continuation from that story. We're a bit late. We're many years late into that, but the fact that institutions are coming at some point, it's great. I think it's only the first step, since it is only Bitcoin. I think there are more assets that you want to include in that. But the fact that this has been slow, I don't think is a surprise to anyone that has worked in the institutional space before. I think the institutional folks probably think we're moving at light speed here, and as crypto folks mean me and you specifically think that this has been the longest dragging process that's ever happened. But somewhere between the two, I think we're going to get more adoption. I specifically also think that because it's only Bitcoin, the question most of the institutions ask, if you want to add extra, Bitcoin's easy to understand, and if you want to add extra assets, given the fact that there is like a plethora of many different crypto assets that are out there, not all are made equal. And so how do you actually go and motivate yourself to kind of understand the industry as deeply, whereas Bitcoin's like this really singular, easy to understand asset to bring on board, I think makes a lot of sense. And the fact that Larry Fink's saying something positive about it, given that BlackRock are also filing for an ETF, these two things are kind of equally coincidental. But I'm curious to hear your thoughts on this as well.
Well, it's just really amazing to see how the tide shift, and they shift so quickly. Like, I mean, 6 months ago, you never would have thought any institutions would even think about touching crypto. I also remember, even in the heat of the bull market, if you guys remember, so Elon Musk or Tesla bought a bunch of Bitcoin, and they were accepting Bitcoin as payment. And then this news came out that Bitcoin is terrible for the environment, or that narrative spread, and like everyone in the world dropped Bitcoin seemingly. And now that's like not even spoken about. It's really funny how it's extremely cyclical. And, I wish it wasn't like this, but it is pretty wild. I did want to cover this alternative side to the bullishness everyone sees about, this ETF. JPMorgan came out with a report, I believe, yesterday. We're recording this on Friday, so I think they came out with this report on Thursday, basically saying that the Bitcoin ETF isn't a huge deal. They said spot Bitcoin ETFs have existed outside the US, in Canada and Europe, and have failed to attract large investor interest. It's a pretty interesting take, right? Like, I do sort of wonder if all of the institutions, all of the individual investors that wanted exposure would already have it by now. So like, I use Fidelity. Fidelity allows you to buy BTC and ETH through their Fidelity crypto product. They custody for it for you. There's no fee for holding it. I think they just take some on the spread when you buy it. In addition, like, I don't know, I think it's just been relatively easy to purchase coins lately, and I don't know how much this ETF makes a difference. It's certainly not bearish, but who knows if it's as good as people are saying. Because the one thing we know about crypto is everything is sell the news. Like, I haven't seen one positive crypto event not be sell the news. Like, everyone just gets hyped up for something to happen, and then the day it happens, it's like the peak of the markets and everything sells off.
Yeah, I would add just one particular element around the spot ETF approval won't actually move the market all that much. Most of the funds that exist in this world, just because Bitcoin wasn't really an asset that kind of could be, regulated in the US. Does not mean that many of the funds had exposure to it, because if you look at kind of how the traditional financial system works, everyone's liability is somebody else's asset, and the whole global financial system was connected in a very systemic way. So even if you didn't have direct exposure, funds of funds of funds ultimately had exposure in other areas, and many of the kind of European branches of these big funds would eventually have some sort of entry into that. I think this opening up in the US is just more of like a credibility check that allows kind of more of a directed approach. That exposure is already there. The funds are kind of already allocated to crypto. I also think that given the fact that companies like Coinbase have had such a good track record, that many of the retail exposure is already directly there. And so, yeah, I think also, and more importantly, the size of what these funds are going to be allocating towards crypto, I think will be less than even just a rounding error. It's going to be such a tiny amount because it's a new industry and it's kind of not really well known. And so at the end of the day, I think the actual magnitude of the flow that's going to go into crypto because of this will be tiny.
I mean, there's so many different providers that are applying for ETFs. So it's not just BlackRock, it's Invesco, it's Fidelity. I think it's maybe like 5 to 7 or so are applying. I was doing a little reading on how these ETFs get funded initially, and there is some like initial capital that you have to put in, but they're not, BlackRock's not just going to buy 50 million or $100 million of BTC in spot to fund the ETF and then hope people purchase it, right? They'll do some sort of OTC deal, presumably, if they can, which will have an effect, right? Like it's Bitcoin that's sort of locked up and will be living in this ETF. And it's going to be good to see all of these different ETF providers compete with each other if it gets approved, right? It's nice that it's not just going to be BlackRock, it's going to be several others, and GBTC can finally go away or convert to an ETF. But similar to the GBTC issue, we just saw this news break today, actually, just this morning. So Gemini is suing DCG and specifically the founder, Barry Silbert, alleging fraud. And it was really interesting here. I was reading, you can see that the lawsuit alleges that Silbert asked Gemini to continue its earn program, even though he was aware at the time that Genesis was massively insolvent. If that's true, that's obviously terrible and completely fraud. We'll see how it shakes out. But it's interesting, like the fallout from 3AC, from Gemini, from all of this stuff, from Genesis that happened over the last 2 years is still playing out, and it's going to continue to play out, like as we're seeing with Mt. Gox for years and years to come. Yeah, I know, Chandler, you have a lot of experience with DCG. If you want to touch on that.
Yeah, so DCG, for anyone that doesn't really know, they've owned a decent portion of different big crypto companies in various verticals. They've owned news agencies, they've owned wallet exchanges. The wallet exchange in particular that I'm referring to was one of the companies I used to work for when I first started my crypto career, called Luno. And they also kind of in the more traditional markets were working with Gemini. And over, I think DCG was a really respectable company. They were kind of gold standard in terms of, commitment to the cause, making sure that that crypto got adopted. And Barry was lauded as one of the most influential people in the space. And I still think that DCG does have the ability to execute a really grand vision for crypto as this holding company, but as of late they're not running with too many wins under their belt. The Gemini issues have kind of caused, I would call them like holes within the system to kind of play out. I don't think this is going to be the only one that comes out. I think the Winklevoss brothers suit against Barry, I think, is in a personal capacity. But basically my TLDR is that Barry's been a star in the industry for many years and is having a few losses at the moment. Everyone loves a good like fall from grace.
We'll see how it plays out. For context, Genesis invested in Astaria's seed round. I haven't spoken to them in a while, but they were great people to work with when we were fundraising. They were super accommodating, very friendly. They tried to help as much as possible. I think Genesis is now defunct. I'm not exactly sure what's going on there, so we'll see how that plays out. But yeah, it's a very interesting story. I feel bad for the Gemini users that use the earn program. I mean, they certainly didn't understand the risks. They didn't know they were lending their capital out to 3AC and all of these other players that were doing crazy stuff in this space. So yeah, it's a really bad look for crypto. I sort of wish the Winklevoss twins would just like personally underwrite the loss that Gemini customers are seeing, because I think the Winklevoss twins are like more than billionaires at this point, and I think they could personally cover the funds. I'm not saying they have any obligation to do so, but would it would be a nice win for crypto retail that has just gotten destroyed and lost so much over the past couple of years across various platforms. All right, so transitioning to even more regulatory centralized exchange situations today, and more breaking news. Pretty crazy week once again. Several high up executives at Binance just left in the wake of sort of this department DOJ investigation, the SEC investigation. So their chief strategy officer left. I believe their general counsel left. I think it's up to like 4 executives or so. They're all sort of blaming it on timing. Like it's that they were saying it's just a coincidence that they all left around the same time. One person said they were about to have a baby and wanted to spend more time with their family. The other said, it's just time to relax, etc. But this sort of reminds me of what we saw with FTX. So when executives started leaving FTX, I forget, was it Sam Trabucco left and wanted to spend time relaxing on his yacht, and he got out before all of the regulatory stuff unfolded and the fraud came out. Binance is certainly not at the level of fraud as FTX, but they have a lot of skeletons in their closet. They've done a lot of shady stuff in the past, and I think action is certainly coming from the DOJ and SEC against Binance and like CZ personally. I think that's pretty clear at this point that the US is really trying to go after them. I would not have any funds on Binance if I were anyone. I don't think there's any reason to keep your funds on Binance. If you're trading perps, maybe try to do it on a decentralized platform. You're probably going to get worse prices, especially if you have huge size, but I don't think it's worth the risk being on Binance. I mean, in the US, we can't really even use Binance. We can use Binance US, but I feel like that's getting shut down anyway. Chandler, you don't use Binance, do you, or have you?
No, I have used them before, but I definitely do not use Binance now. I am a self-custody person and will continue to beat that drum for as long as I work in the space. But more specifically on this topic itself, coincident? I actually think not. I mean, we've been fooled once before. I don't think we're going to be fooled again in this case. I totally agree with you. Binance has always had some skeletons in their closet. I don't think that they're as directly causing as much fraud as what FTX did. But at the end of the day, I'm sure that there is something that Binance are trying to kind of hide specifically. Given the fact that the SEC's allegations are on a personal capacity to CZ, also kind of alludes to that there is definitely some information that will be coming out in the next little while kind of exposing this. I also think that the fact that the 4 executives have left all at the same time is the kind of clue that we need for that. It doesn't actually change the fact that they'll still be held liable if they were in the wrong, because they still sat in that seat when the crime was done. It's just a kind of like signal that's unwrapping the Binance shenanigans that have happened for a while. I also kind of sad that this is the case. Binance was the one that we were kind of rooting for after FTX. Everyone was like, oh, but Binance hasn't done anything terrible. They're going to be fine. And now it comes out that they're not. And so we spoke about it a bit earlier with Barry Silbert, his fall from grace, the FTX debacle. It just looks like that, any sort of figure in the crypto space really hasn't held up the torch too much. I mean, there are a few that we can speak about. Immediately they come to mind. And I don't want to jinx this. This is not a jinx, but is the Coinbase CEO, Brian Armstrong. He's been a paragon of our space. But yeah, I think we're losing a lot of the heroes that we've had and the kind of, fundamental infrastructure that we've built for the good and bad of it. Binance has basically enabled crypto on a global scale. They're in more countries than any other exchange. They do, whether the volume is real or not, but they've done some of the biggest volume. They manage the biggest amount of assets in terms of any exchange. And so it'll be a huge pain for the industry once they're gone. I think that it'll be a net negative overall, even if what they have, the route that they've got there has been paved with some illegal skeletons.
What do you think the odds are that like one day we all just wake up and the Binance website is just like the seized by the FBI, landing page? I mean, it's possible, right? Like I know Binance is not a US based company, but I mean the US has incredible reach, as we saw with FTX. I mean, FTX, aside from FTX US, they weren't a US company, and yet, Sam Bankman-Fried's extradited, and the US is just basically like took over the entire bankruptcy process for FTX, even though it's not a US company. I know they filed for bankruptcy in the US, but yeah, I mean, I think the US really does have the power, for better or worse, to do what it wants here. And so it's going to be interesting to see how willing they are to impact retail and users, because they can really do whatever they want with Binance. CZ is a bit different because he's, I believe, in Dubai, and Dubai does not extradite, but we'll see. I did want to share this interesting tweet from one of our favorite threaders, Adam Cochran, notorious in the the Twitter landscape. He said that basically over the last day or two, TUSD deposits on Binance jumped from under 500 million to almost 2.7 billion dollars overnight. For those that don't know, TUSD is a Justin Sun stablecoin. Basically, he has the private key to mint as much TUSD as he wants, and this TUSD token is allowed to be used as 90% TVL collateral on Binance. You know, this could just be a red herring, but it's a little ominous, right? I mean, this TUSD stablecoin, people think it's insolvent. I think Aave disabled lending for TUSD. There's a little bit of lending on Compound for it, but not much. And basically, all DeFi protocols are trying to get rid of any exposure to TUSD just because it's seemingly completely unbacked, or there's just no understanding of backing for it. So what do you make of this? The fact that overnight TUSD jumps on Binance to $2.7 billion. Where is all this coming from? Is it just that they're trying to collateralize their positions? Binance itself is trying to remain solvent with all these withdrawals coming from the regulatory scares, or what's going on here?
It could be very well exactly. I think the fact that this is a centralized exchange and we only get, the fact that we can actually see these transactions going in gives us the reason to like ask these questions. And I feel like that's just naturally an advantage that we would have had if this was in the traditional space. We would have never had that insight. And the fact that we get that insight gives us a very open clue. Speculating as to what they're doing with this, I have no idea. We've always known that TUSD has been very closely tied with the Binance team, and the Binance team have had influence over the flows and where TUSD gets used. And so I definitely suspect that because of some of the shenanigans that have happened, that and just the magnitude of the flow means that I think that they are trying to do some sort of like solvency tests. What the root cause of that, I wouldn't be able to speculate right now. The only thing I pray and hope for is that none of that actually is a hole in their balance sheet, like an outright hole that they're just trying to plug temporarily and maybe trying to find a way to trade themselves out of it. I genuinely hope that it's a way to kind of keep them solvent in a true sense.
Yeah, I'm trying to find. I saw an article. Here it is. I think it was like the FTX accounting team, or the FTX auditors are also the TUSD auditors, which does not spark confidence, right? So this is about a little over a week old, but you can see that TrueUSD depegs on news of questionable auditor. So the auditor was involved in the FTX scandal. Who knows? Again, it could be a red herring, but overall, it's not a good look for Binance. I think there's a lot happening, and I think a lot's going to unfold over the next several months. The flip side to that is Binance can remain solvent as long as the market, stays propped up. But if we see another crash, that could lead to more withdrawals from Binance and whatnot, and especially if more regulatory news comes out. So the big news in the NFT space over the past week or two has been that the Azuki collection did another sale for a derivative collection. They raised $40 million from the mint, which is obviously impressive and a massive amount. But the problem is the art that they released. I believe they released a collection of 20,000 or so new pieces, and their original collection was, I think, 10,000. I'm not positive on those numbers, but the artwork was basically identical. You can see some comparison shots, and it was basically looked like no new work was done to create anything. Now Azuki DAO looks like they voted to sue Azuki over the $40 million mint. And I think this raises a ton of questions. Like, do NFT projects have any obligation after the sale of the NFT to try to deliver value? Is this $40 million just pure profit for the Azuki company? Does it go back to shareholders? Is that fine? Do they have any obligation to the DAO to return this capital? I think you can see it both ways. I mean, it's definitely a gray area. It's not like an ERC20 token where there's some expectation of network development, let's say. This is literally just an NFT collection, but these are large chunks of money. So it's certainly a gray area.
I would also want to add here that this story, the way I'd like to sum it up is what not to do. There's a lot of kind of things that just don't make sense in the story. I'm somewhat understanding of the fact that the Azuki community are feeling a bit disgruntled about the fact that new art got released and the new art is so close to the old art that they feel like it's kind of not even worth their time or their financial investment into these NFTs. But that was part of the whole reveal process, right? You had to pre-buy, you kind of always knew that there was going to be some sort of risk on that one. And then the other side of it is that there is a lawsuit from a sub DAO that got spun out as a result of this, angered community. They set up a DAO, and the DAO voted yes to do the lawsuit. But the question I have is, how is a DAO going to get represented in court? Like a DAO, it just doesn't make any sense. And like, what are they going to do? Return the funds? Well, the art's already been created. That was the initial deal. And so, was there an investment contract? Was there a contract say, I will make sure that the art's to your liking? No. So all of this just really doesn't make sense. And so, from the Azuki side, I think this just screams silliness to me and is kind of crazy. Totally agree that the magnitude of the finances here kind of makes sense, but at the end of the day, I think the shenanigans that have played out in the NFT space really kind of like lead me to wonder, like, what are these projects doing for long-term sustainable business models that are revenue generating and ultimately can kind of generate some sort of value, like you were alluding to kind of from the network side. But just to simply relaunch a new token so you can grab some extra funds and use that to fund the ecosystem from a standpoint, I don't think this is sustainable. And I think many other NFT collection projects are going to look at this and be like, oh, we're not guaranteed to kind of have a value generation by creating new art, because there has to be some sort of value that kind of gets derived from that art, and that value that gets derived from the art can't be just like one and done token drops. That method no longer is valuable anymore. And so I think that this is going to be a wake-up call for any collection that wants to be sustainable for a longer term for their community, needs to find a better way to manage themselves. And I think just this outcome is ridiculous. But I'll be very interested to know what lawyer says yes to this suit, and how are they going to manage it.
Are they going to get paid in these bean tokens? I guess that's the question.
Yeah, exactly. And like at the end of the day, I think a group of disgruntled individuals probably need to handle themselves a little bit differently when coming up with this. I think the fact that a DAO got spun out of it, I think is still good news for like community coordination. But at the end of the day, every one of those members should have known what they were getting into.
Yeah, we'll see. I also think like I don't know if Azuki published like a public roadmap of things they were going to do for the community with this money. But like, if you assume that they didn't publish anything, that they didn't have like a deliverable list of what they wanted to do for the community with the money they raised, then like in my mind, it seems like weird expectations to have assumed that this money would sort of somehow come back to the community or provide any community benefit, right? Like if you buy a collectible from Disney, you don't expect that like Disney's going to work to like drive value to your collectible. It just seems like everyone in the crypto space tries to make everything an investment, right? I don't know. It's hard to make the case that these things are an investment. No offense to Azuki holders. They're cool, I guess, but it literally is just a picture, right? So
yeah. And I also think that I think when right before the drop, Azukis were trading at 17.5 ETH. We saw a massive tanking in that floor price down to about 6.5, and so that adds just to some of the pain that the Azuki holders must have. And I think the ones that was standing on the buy side, just going like, oh great, new token drop, it's going to be great for the community, going to bring more people into the Azuki fold, and it quite violently backfires. I think also leaves a bad taste. And I think if the net silver lining out of this is one, new token projects will definitely need to find a more sustainable model for themselves over time. You can't just simply do one token drop and rest on your laurels and hope that another token drop will be the revenue stream for you and your community. And number two, being more kind of like tone and kind of tied in with tone, in tune and tied in with your community, I think will be a strategy that I think many of the collection teams will be employing, moving forward.
what do you make of the Azuki floor dropping from almost 18 ETH to 6.5 ETH? I mean, a lot of that came from leverage in the system from the blend loans that were incentivized, and so there were these cascading liquidations. But I'm curious, like, do you think is that Azuki holders repricing like the value they expect to see from the Azuki team in the future, or is that just people fed up and leaving? Like, is this a rational reaction to what happened in the market, or just price moving randomly?
Knee-jerk rage quit.
Yeah.
At the end of the day, that's how the price moves so violently so quickly. I think it's just it's an encapsulation of the anger that many of the community members felt, and then just decided to just exit and rage quit. And so I don't think
Are you a buyer at 6.5 ETH?
I do like NFT collections. I have a bunch. I don't think I would want to be part of the Azuki community.
Gotcha. Cool. Yeah, I don't have an Azuki. I only own two squiggles right now. That's all I got. But with that, that's all we had planned for this week. Obviously, it was a crazy week, so this episode might be a little bit longer, but hopefully you enjoyed it. Hopefully you had a great time watching and learned something. So with that said, have a great rest of your week, and we will see you guys on the next one. Thanks, everyone.